that spread go?
I think clearly in the immediate future the risk is that the spread goes a little bit further. Obviously in the case of Italy the political risk is a lot more acute than it is in Spain. Both bond markets have benefited from the perceived pickup in economic activity generally in Europe in the last few months, but obviously the Berlusconi factor is putting additional upward pressure on Italian yield.
JP Morgan put out a note recently, says they attach a 10% likelihood on there being new elections. Do you think that's about right?
I think that's about right. You can never rule out a complete collapse of the government and new elections, in which case you could see Italian bonds significantly performing their Spanish counterparts and significant upward pressure on the spread, perhaps towards the levels we've seen previously, above 50 basis points at 10 years, closer to 100 basis points, and that in itself would prompt significant, obviously, widening against the core. But I think I would attach a relatively low probability to that, and for that reason I think that the additional spread widening, which we'll probably no doubt see, will be relatively limited in the region of the sort of 20-30 basis point range.
Okay, and this move that we're seeing in Italian bond yields, is it all down to politics? I mean, because the financial and fiscal and economic picture isn't particularly bright either.
No, it's not, and I think longer term that is going to become a more significant factor for investors in Italian bonds again. I mean, we saw obviously the GDP numbers today, which were published, which were a little bit disappointing compared with the flash estimate, a fall of 0.3% in the second quarter. But you have to say that's a significant improvement from what we've seen in the previous couple of quarters. And you look at the figures, it's a fairly broad-based improvement, and some of the more timelier indicators such as PMI, the more forward-looking surveys, are suggesting that the pickup in activity can continue.
Consensus is for the Italian economy to return to growth in sometime in the first half next year. You don't buy that, and you go further though and think Italy will need some sort of bailout early next year.
Yeah, I think so. I mean, I think that both the official forecast and the consensus are too optimistic in looking for a return to growth in 2014. I think we'll still be in negative territory as far as GDP is concerned next year. I'm sort of targeting a number somewhere around about 1.5% contraction.
You say all that even though Italy runs a primary surplus?
Yeah, I think it's going to be very difficult because going forward I just think as with a lot of these peripheral economies the official forecasts are just way too optimistic versus what I think is going to actually be